Hello, everyone. Sorry about that false start. Welcome to our Practical Guide to QuickBooks webinar. My name is Mallory Krieger. I am the Farmer Training Manager at the Land Connection, and we are the host of this webinar. Today, our presenters will be Laura Hesselberg from Compeer Financial and Traci Barkley from Sola Gratia Farm. A couple of housekeeping things that I want to run through with everyone. To ensure that we have the highest quality sound, I ask that everybody keeps their microphones muted, and questions are encouraged throughout the webinar, but I ask that you type them into the chat feature. I will be reading them aloud periodically to our presenters so that they're able to focus on presenting and we can make sure that all of your questions get answered. Well, the next thing to talk about is our funding source. So this webinar is part of our Farm Finances webinar series, and it is made possible by North Central Extension Risk Management Education, which is a grant program run through the USDA. And so we are very grateful for their support in being able to offer these types of educational opportunities to farmers. Today's presenters, Laura and Traci, will be talking through how to use QuickBooks and enter transactions. And then Traci will be following up with her experience and lessons learned with incorporating QuickBooks into her farming operation, Sola Gratia Farm. As I said a moment ago, please do ask questions throughout the whole webinar. Type them into the chat feature and we will stop periodically to answer them. So without further ado, I would like to introduce our first presenter, Laura Hesselberg with Compeer Financial. She will be talking you through the basics of QuickBooks.
I'm here now. Sorry.
Welcome.
Sorry. Now, can you see my screen? I got the share, but then it went away.
We can still see your screen.
You can see the setting up QuickBooks?
Yes.
Okay, perfect. All right, we'll just jump right in. I'm Laura Hesselberg from Compeer Financial up in Wisconsin. We put together a presentation that we gave back this summer to clients that wanted to do their own records on QuickBooks. So these were some tips, thoughts they could use to make sure that the setting up process went smoothly and they had what they needed. So just to set up your QuickBooks, what you'll need to begin with is any prior year loan information, you know, that 12/31 balance that's your calendar, if you're on a calendar year. Any uncleared checks or deposits that you wrote in December and haven't cleared until the January bank statement. Fixed asset reports, those are all things on your balance sheet, and a tax return. And a tax return, as you know, for like partnerships, corps, they include a balance sheet in that tax return. So your tax return your balance sheet in the tax return should match what your QuickBooks balance sheet says on that same date. So it's very important that you get that information. So there's two types of accounting. You can either be cash or accrual. Most people in this area are a cash basis, meaning that when you write a check for an expense or you deposit money from somebody, that is when you include that expense or income. If you're accrual basis, that means if you haven't written the check but you got a bill in the mail, you can take that expense as an expense before you've written the check. You can figure out what type of accounting you are by looking at your tax return. So for 1040, it's listed on the top of your Schedule F. A 1065, it's on the top of page 1 of the Form 1065. For an 1120, it's at the bottom of page 3 on 1120, Form 1120. And for an 1120S, it's at the top of the page, Form 1120S. We also have some people that may enter their bills even though they are not paid. Just because their tax or their loan officer would like to see, you know, what is outstanding. So then what's nice about QuickBooks is you can run your reports cash basis for your tax preparer or accrual basis for your loan officer. A really nice feature. So this is a sample of a report out of QuickBooks. Notice here where it says cash basis. So that tells you this report is cash basis. The newer version of QuickBooks, you can check accrual and flip-flop back and forth quite easily. So being that you can flip-flop back and forth, just make sure for your tax consultants that you are giving them the proper report so nothing is over or under reported. To change the accounting method in QuickBooks, you can set up your reports to always print as a cash basis or always accrual, but you still have that option to be able to change it within the report, on the fly if you need to. Chart of accounts. What is a chart of accounts? Chart of accounts is a list of names of accounts used for recording transactions. Balance sheet accounts are things like assets, which could be checking, savings accounts, fixed assets, co-op stocks, etc. Balance sheet also contains liabilities, note payables, loans, payroll taxes payable, and then owner's equity for a sole proprietor would be the capital given to a business by its shareholder. So for a partnership, it would be like a partner capital account, something like that. Retained earnings for a corporation, which means they don't split out to see who put in money, because usually that normally shouldn't happen, but that's something you can discuss with your tax consultant. So when you're entering a balance sheet, the difference between the assets and liabilities is posted to the owner's equity or retained earnings, depending on which type of entity you are. A note about the balance sheet, those balances do roll over from one year to the next. It's just a continual, unlike a profit and loss or an income statement where those zero out at the end of the year. So for income statement accounts, which flow to that profit and loss, you'll have revenues such as grain sales, animal sales, patronage refunds, rent income. For expenses, some samples would be feed, vet, utilities, supplies, repairs, fuel, things like that. Anybody have any questions on that?
No questions just yet.
Okay. So we recommend you can start a QuickBooks with a generic set of chart of accounts. It will, if you say I'm an agricultural person, it will kind of give you a generic set of accounts. Here at Compeer, we like to give our clients a chart of accounts to start with that very closely matches the tax return, and it points out things that we need split out, broken out, or set off by themselves. We recommend that you keep it very simple to start. Don't have 20 feed accounts or 20 supply accounts. I would wait until you are comfortable with QuickBooks before you start breaking out to get that extra detail. To set up a new account, you can go into List, Chart of Accounts, Account and New, and then just go from there. You will be asked, is it an income and expense, fixed asset, a bank, a loan? And then under that drop down, you'll see some other choices, a little more detail. So you select your account type and click Continue. So here's an example. Compeer gave me a tractor loan. I'm going to set it up as a long-term liability. my account name is note payable Compeer-tractor, and I can hit save and close. So here's an example. This is a grain check that we received. You can enter deposits for grain checks and milk checks in two different ways. You can go right to the record deposit screen, or you can do it through a sales receipt entry. By using that sales receipt entry, you can enter things like quantity, like head count, bushels, can't think of another quantity, but something like that. So this would be a sample of that grain check entered into as a sales receipt. Notice we have the date, our wheat sales, and our quantity is 2,000 bushels, and our gross amount is $8,400. And then we could subtract off the hauling and the marketing. This total amount down here, the $8,059.16, should equal what your check is in your hand. So here we sold a couple cows for $1951.26, and this is the example as entering it as a sales receipt. Dairy cattle raised, 2 head, and there's my net check, $1951.26. So here's the benefit of doing entering a deposit through a sales receipt. You'll see there we have the quantity, so we can see how many cattle we sold for the year, what our total bushels of wheat sold. It'll give you a percent of sales and an average price per that quantity.
Laura, it appears that we've lost your audio. Are you still speaking?
Oh,
Oh, you're back.
I'm here. Okay. Sorry. So now we're jumping ahead to patronage checks. Patronage checks are, money received back from when you buy items at a co-op. These can be sort of confusing. Now we've seen a lot lately of non-qualified equity or stock. The main thing to watch is this box 1 up on top where it says patronage dividends. That is the amount that you have to claim on your tax return. And then down below, you're going to see they gave you $767.87 in cash, and the $1151.81 they're keeping back as a stock to be retired hopefully down the road at some time. So just below that equity check or patronage equity check is an example of how you would enter that as a deposit. Our first line goes to patronage refunds, and it shows that $1919.68, the total amount. And then the offset would be your co-op stock, which is an asset account, for the $1151.81. Therefore, netting out to the $767.87, which you received as a check. Is there any questions on that?
Yes, we do have several questions.
Okay.
So the first question is, the examples that you're providing, are they relevant to nonprofit as well as for-profit businesses?
Well, the examples as far as
and what you're talking about, like how you're talking about to use QuickBooks. So the question verbatim is this relevant to nonprofit as well as for-profit?
I would say yes. I'm sure a nonprofit has to have a balance sheet. I actually do. We have a very small historical society, not related to farming, but we do have to provide, certain items to the state at the end of the year. So I would say this is very relevant.
And I'd like to also throw in there that Sola Gratia Farm is a nonprofit organization, and so Traci will be able to give some insight in the latter half of the webinar about how being a nonprofit has affected her bookkeeping. The next question is, are the examples relevant to QuickBooks Online? We've had a couple of questions about the difference between QuickBooks Online and QuickBooks Desktop.
QuickBooks Desktop is completely different from QuickBooks Online. If you're familiar with QuickBooks Desktop, it's going to throw you for a loop. I'm just going to be honest. You can run the same types of reports. It's just how do you get there and how you set them up that could be a little, it's a learning curve. I'm going to say some positive things about QuickBooks Online. You never have to worry about backing it up. If your computer goes down, you can log on to any computer and all your information is there. It's nice, QuickBooks Online, you can give your tax consultant access to it. They can log in with their own login, pull the reports, see what you're doing. And you don't have to mess around with the backup, sending it back and forth, or an accountant's copy or anything like that. Just know it is a learning curve if you're used to the desktop version.
And you're using the desktop version today?
I am.
Great. How much does a QuickBooks license cost?
For desktop?
Yes.
Last time I checked, I think it was in that $150 range, and that would be for QuickBooks Pro. Now, if you have payroll, that is another cost, and it's been ranging from like $300 to $400 depending on how many employees. And I think now they have a basic version and an enhanced version.
And the QuickBooks Online is based on a monthly subscription, and
Correct.
That varies based on the level of features that you choose. It can be very cheap, like $10 a month, or the incredibly basic, but if you want the power of QuickBooks Desktop, it is considerably more expensive.
Yeah. Yeah.
The next question. Oh, go ahead.
I was going to say the $10 basic is probably a bit too basic for farms. I would at least go the one level up from that.
So the next. Oh, I'm sorry.
If you do search QuickBooks Online comparison, I think it will bring up so you can kind of see what's included. But okay, I'm done.
So the next question, we have about 2 more questions. The next one is, if land owned personally is rented to the farm LLC, does it sit in the balance sheet?
No, not on the LLC's balance sheet. It should be on the personal balance sheet.
Okay. And can these reports be run via POS, or is this only desktop?
I am not familiar with PLS.
So I think they mean a point of sale system.
Oh, POS?
Mm-hmm.
You should be able to. I can't think why you wouldn't be able
to. Okay, so that's all the questions we'll ask during this session. The remaining ones we'll ask in the next one. Thanks.
Okay. All right, now we're back to co-op stock and retired stock. So here, this company is retiring their 2002 equity. This is not income. You have already claimed it back in 2002 on your patronage check. So it is just going to come off on the bottom there. You'll see it's coded to the asset account co-op stock for $64.95. Just reducing your assets. Crop insurance proceeds. This can be a tricky one. Here again, they can pay you out a certain amount of money, but maybe they'll withhold if you hadn't paid your premium. So your total claim was $11,374. This needs to be claimed on your tax return. And then the credits to policy for $1,104, so that was your premium. On the bottom there, you're going to see we credited crop insurance proceeds. That's an income for $11,374. And then we did a negative, which will end up being a debit to the crop insurance expense for $1,104. Most likely, I would say 99.9% of the time, you will receive a 1099. So this is one of those things you'll have to match up at the end of the year. USDA payments. For these, you should receive a 1099-G at the end of the year. We code these to agricultural program payments. Some people just call it government payments. I would just choose one account so you can easily match up that 1099-G at the end of the year. Okay, so now we're going to buy some equipment. And this is an example. We bought a new Kinsey grain cart and we traded an old J&M grain cart. In this example, we paid $5,000 down payment. So in our check, we can do this wholesale. Our first line is going to the asset account equipment, and that's going to be the total that we paid, $44,161. This year, they're treating the trade-ins a little different. We used to take it right off the equipment account, but in fixed assets, we have to show that trade-in as if you sold it outright. So we ask people to please show that trade-in as a sale of assets gross proceeds for the actual amount you got for the trade-in. And then the rest of the amount owed, $16,000, we put to a new note payable Compeer loan. One thing I'd like to mention is, please put all kinds of detail in there. I could say you cannot do too much detail so everybody knows, if you have to look back, what happened in this transaction. And also give your tax consultants a copy of your purchase agreements. They will need these to make sure that they have the correct trade amount. So here's an example of a fixed asset. We did a new loan, but we didn't have to pay any money down. So we entered it through a journal entry. Here again, we debited fixed asset equipment account for $44,161. We did our sale of assets gross proceeds to show the trade, and then we offset to a new loan at Compeer for $21,000. Journal entries are types of entries that do not affect cash. So it's very common here for a client to come in and say, can you send $5,000 to the co-op? You bet. So in your books, you need to do that as a journal entry showing $5,000 to whatever expense, be it seed, fertilizer, and then offsetting that to your Compeer loan, which we have an example here. So here we paid directly to the co-op, and then we showed all our expenses, and this is a non-cash transaction. For loan payments, it's very important. Loan payments are not expenses. The only thing that is an expense would be as if you paid interest. So when you make your Ag Direct payment, you want to make sure you are going against the loan, and if you happen to be splitting out interest, it would go to interest expense. At year end, Ag Direct, John Deere, CNH, they will all send you letters stating this is your ending balance, and this is the amount of interest you paid. This is a good time to clean those accounts up, make sure all your interest is recorded and your loan ending balance is matching what the company says. Any questions?
Yes, we have a couple questions. The,
Okay.
fir- the first question is about scanning and keeping electronic records of invoices, checks, etc. So this person says they scan their documents for record keeping purposes so that they have an electronic copy of the paper copy. What's the recommended best practice for keeping electronic copies? Can you do that inside of QuickBooks or just scan them to a folder on the computer like they're doing currently?
I would probably keep it in a separate folder on the computer. I have this fear that if you scan and start putting stuff in QuickBooks, um, it's going to slow down your program. That might not be true, but we have an in-house program here we can do that with, and I just feel like it would really slow it down. And then it's
Um,
easier to back up just that folder too.
and this is one difference between the QuickBooks Desktop and the QuickBooks Online. With the QuickBooks Online, because it's held on external servers that can take the load, you can attach the files to your records in QuickBooks, and it doesn't cause a slowdown. But
Good.
that may be a trouble for the desktop version. There is
Right.
another question. How would we enter grants and fundraised money?
Okay. Grants, we usually just set up an account called grant, and it's an income account. And then fundraiser, I would probably set that up as an income too, but we might want to wait and see how Traci does it for sure. She would probably be best to answer that.
Great. That is all the questions for now.
Okay. Credit cards. QuickBooks is wonderful at handling credit cards. You can set up a credit card liability, enter your purchases in there one at a time, and then actually reconcile it like a bank account when you get your credit card statement. I use this for the John Deere financial RLOC, the old farm plan, because it is just like a credit card, or CNH has one too. So first you need to set up your credit card account, go to list, chart of account, select account and new, just like we did previously. Remember to make it account type is credit card, just like it says on top here. If you have an opening balance, this is your first of the year, you can enter your opening balance from your prior statement. When you go to reconcile, it's all in there. And then if you look on the bottom, this is a little snippet of the balance sheet and how it's going to appear on your balance sheet as a current liability, credit card, and then the credit card name. So from on your home screen, you will see enter credit card charges. It's that little icon up there on top. You can just double click to enter. You can have multiple credit cards. So where it says credit card Bank of America, you can hit that drop down and choose if you have John Deere, CNH. And it's very similar to entering a check. You can choose purchase or charge, or if you have a refund, enter the date, who you purchased it from, and then code it to whatever expense. What I tell people is, it's a good idea if you use your credit card a lot, as soon as those slips come in, enter it right into QuickBooks and you're done. You can file that slip away and not worry until the statement comes. So then when your credit card statement does come, you'll go to reconcile, choose your Bank of America credit card, enter the ending balance on the statement. If you have finance charges, you can enter them there and then choose the date. Choose your expense account. This is a little snippet of the actual reconciliation screen. You just check off your charges as they appear on the statement and your payment. And once your difference is 0, you can hit reconcile now. The reconcile screen is a good place to watch. See how we still have one from 3/1 of 18 hanging out there. You know, we want to clean those up. Go investigate. Did I actually enter it twice and this is just the extra one? Was it actually paid on a different card and I just got mixed up? So as you're reconciling checking, loans, um, credit cards, just watch for those outstanding old items. Now we're going to talk about vendors and the 1099 and W-9. Don't confuse vendors with employees. For determining help, if there's a person is an employee, you know, see your tax consultant. I know Wisconsin has a 10-point checklist that you should go through to see if a person is an employee or truly an independent contractor. This Form W-9 is available online through irs.gov. You can just go to their website, search W-9, and it'll come up with the most current version. Make sure the vendor fills this out completely. We need their name, address, what type of entity, it's all listed on there, and their federal ID number. Truly, you should not write anybody a check until you have this W-9 or a W-4 filled out. It's really hard to get somebody's numbers after you've paid them, so then you're kind of stuck. In QuickBooks, you can mark, once you have somebody's W-9, you can mark them a 1099 recipient. Right here under the tax settings, you'll say vendor eligible for 1099 and enter their tax ID. Just a side note, the penalties for not filing 1099s, if you've never done it, late filing can be $50 to $100 per form. No filing at all, if you forgot or missed, is $270 per missed form. And intentional disregard, meaning you knew you should have filed but you didn't, could be a penalty of $540 per form. So that's why we really stress, get those numbers, file the correct forms, just so you're covered. Any questions on the vendors or?
We have no questions at this time.
Okay. So just do a brief overview of employee forms. These 3 forms are required for hiring employees, at least in Wisconsin. I know I have a Nebraska client and they do not have a state form. It's strange. But you need that federal W-4 state form. You'll have to check with your state. And then the federal form I-9. That's the one where you have to have a driver's license, social security card, or passport. It explains on there. But they want proof of that you should be in this country. Just a quick note, remember social security numbers do not begin with 9. If somebody gives you one, that is not a valid number for employment. It was brought up that the I-9s should be kept in a separate location, such as a binder, and not in the personnel file with the W-4. This binder should only be available to a few people and not all managers because it contains personal information such as immigration status, marriage status, etc. That was noted on the IRS website. One very important thing is keep your QuickBooks up to date. It costs you nothing. You've already paid for the program. The updates are free unless you want to upgrade to a new version, new year version. They come out once a year. But by keeping your QuickBooks updated, you're going to prevent viruses, problems with your QuickBooks file, things like that. And QuickBooks for just the QuickBooks program, not payroll, supports only 4 years back. So if you have an older version than 4 years, we suggest updating. Payroll, you do have to buy the upgrade annually, but just the the basic program you can get away with buying every 4 years. That's all I have for the slides. If you want to see some items in QuickBooks, I can actually have it open. What do you think, Mallory?
Yeah, if you wouldn't mind, let's take just a quick tour of what QuickBooks looks like, the QuickBooks desktop version.
Sure. Okay. So this is a test client we have set up. This can be overwhelming, the amount of apps on here, but actually that is based on what your choices are, your preferences are on the up here, edit preferences. So whatever's checked on here is going to end up on your desktop. Let's see. So to write a check, you can go do it one of two ways. You can click here on the write check or go into check register. I prefer the write check because it's just very easy. You can list out multiple expenses down here, choose who you want to write it to. Up here is if you're going to print your checks, you have this marked print later. You can enter a bunch of items and then print them all at once on the different checks. That's it. Very simple. So like I said before, some people will choose to enter all of their bills, maybe not pay them all, but they want them in there because their loan officer wants to see what actually do you owe, just beyond the loans you have with the bank. This is where you would go in and enter your bills. So you would choose maybe the co-op, and we received a statement today, and we spent, $5,000 on feed. $200 on supplies, and $5,000 on feed. So if we look at that P&L, and it's a cash basis, notice we don't see our feed expense, our seed expense. But if we hit accrual, we do see that feed and the feed because we've entered that bill. Accrual basis means we could take that expense before we paid for it. That's something to watch. And then when you're ready to pay your bills, you can just come here. Okay, I want to just pay, $5,000, even though it says I owe 40. And then go ahead and pay selected bills, and you can print your check for $5,000. And then when you come back in here, it will leave the $35,000 outstanding to be paid. This is the standard P&L. This is your income on top and your expense below. You can customize this a little bit. Say you want to see multiple years. So if we put year here, and then now here you could have a side-by-side for the last 5 years of your profit and loss. You can see trends, income, expenses, and things like that.
Laura, we have a question here about doing cash flow statements. Could you show
Yes.
everyone how to do that?
Yes. So QuickBooks does have a cash flow statement. We don't use it often. I'll tell you the one thing about statement of cash flows, it is on an accrual basis, and there's no way to change that. So if you're a cash basis client and you give this to your loan officer, it's not going to match what your P&L says for profit or in net income because it is on accrual.
Can the cash flow statement be broken out into periods like months?
No. But you could run your P&L by month. And then if you made it an accrual basis, it's not going to tell you what went to the loans, but it would give you the P&L side of it by month. I think you can do the same thing with the balance sheet. Not sure if that will help or not.
And we have another question. So earlier you were talking about the penalties for not filing the 1099.
Yes.
One of the individuals on the webinar had a previous CPA advise that they didn't need to file the 1099s, but then in a later tax year when they went to a new CPA, the new CPA found that there were previous 1099s that should have been issued and weren't. The question is, should they pay the penalties and issue the documents using the new CPA, or should they go back to the old CPA for this issue?
Is the new CPA saying that they should file the 1099?
Yes.
I guess I would use the new CPA to file.
Okay. Thank you. All right. So is there anything else that you would like to show us in the QuickBooks application?
Sure. Just a couple quick things. You can memorize. Once you have a report set up the way you like it, you can click up here and memorize that report. Right up over here. You know, if you want to call this balance sheet by month, you can do, profit and loss by month, anything you like. And then to make a backup, you just go up here, file, back up the company, and just follow the directions. And I think that's all I have.
All right, well, thank you so much, Laura. We will now move our presentation over to Traci Barkley with Sola Gratia Farm. Traci is a farmer in Champaign-Urbana area and runs a nonprofit farm that uses QuickBooks, and she's going to be sharing with us her experience implementing it on their farm business. So we'll just take 1 second for Traci to get her presentation fired up.
Great. Okay. Thank you very much for the opportunity. My name is Traci Barkley. I'm the director of Sola Gratia Farm in Urbana, Illinois. We have just recently begun using QuickBooks. So I'm going to be speaking from a recently transitioned from lots and lots of Excel spreadsheets perspective. Hopefully, for those of you that are on the phone or on this webinar, that this is useful to you if this is something you're thinking about getting into or a beginner yourself. So for us, we are a 12-acre mission-based vegetable farm. We started with 4 acres, so we've recently, and just in the last 2 years, experienced considerable growth and expansion, and that really has necessitated upgrades in a lot of our systems, one of them being our bookkeeping. We're located in Urbana, Illinois. We have a community of 37,000 here. It's also Twin Cities, so the larger area is really about 100,000 population. The reason I say that is because we're an in-town urban farm, so it helps you give a little perspective of what 12 acres in that community might be like. We were started by St. Matthew Lutheran Church. In order to address food insecurity in our community, we were started as a limited liability corporation in 2012. In 2017, we became a federal 501c not-for-profit organization, and at the state level, a not-for-profit corporation. And we did that for a number of reasons. One, to fully signal that yes, we had been from the beginning and would continue to be committed to being a nonprofit farm with a mission to serve those who are food insecure in our community. It also allowed for us to be able to have a robust volunteer program on our farm, and it also opened up opportunities for us to bring in grants. So there was a question earlier about grants, so I'll address that because that is part of our funding, part of what allows us to do some of the work that we do. Oh, sorry. So this is our mission statement. In short, we have a 3-part mission. One is to serve our food insecure neighbors, and so we do that by donating at least 10% of everything we grow to area food banks, pantries, and soup kitchens. The second part of our mission is to farm sustainably, and the third is to build community through outreach and education and community events. So for us, income comes in a lot of different ways. We run a large CSA, Community Supported Agriculture membership program. So we have 150 shares, and actually there's a mistake on this slide. It's really not 150 members. We tend to have closer to 200 members because we offer both partial and full shares. So that's a lot of people and a lot of customers we're managing. Our retail outlets are 2 farmers markets, so we're at that weekly between May and October. Our wholesale outlets include 3 grocery stores, 2 cooperatives, and 1 not-for-profit grocery store, and several restaurants and caterers in the area. We do have donations, some of which are designated specifically to donate shares of produce to the food bank in our community. Some donations are specifically for generating general operating funds or for specific purchases of supplies or equipment. And then grants, I would say, I characterize the same way. Some of them are for general operating and some of them are for specific purchases. So when we get to the QuickBooks examples, we track all of those separately, those that are for general operating or those that are for specific purchases. And then we do have fundraising events, and I'll show you in our chart of accounts later on that we track all of that in a lot of detail because that helps. We're a small not-for-profit farm, and we try really hard to be lean and smart and effective with our efforts. And for fundraising, we watch that pretty closely to see, what the expenses are, what's brought in, were there additional non-financial benefits as well. So for expenses, you can imagine there's a lot of different things in for farms. Payroll is our largest expense by far. Next for us is production, it's supplies and equipment for us to operate the farm. Next would be infrastructure. And then we have a small amount of our budget that goes towards marketing, outreach, and education. And then there's always a miscellaneous category that's for taxes, our general liability insurance, our workers' comp insurance, filing fees, bank fees, all the other things that it takes to run a business. So for us, QuickBooks has been a really good experience. I'll tell you, listening to Laura just reaffirmed for me that there are a whole lot of opportunities for us to be using QuickBooks. We are using it in a very, very basic way right now, and towards the end of my talk, I'll get into some of the areas I'd like to see us using QuickBooks that we're exploring right now. We use a desktop version because we're a not-for-profit. We use the not-for-profit desktop edition, and we ended up getting ours through TechSoup, which is an online software company that provides software for not-for-profits at a discount. So I think our license maybe has been close to $50. We use it for cash basis accounting. To get set up, we worked with a bookkeeper in town who's actually one of our CSA members, and for very fair hourly fee, she helped us learn just the very basics of the program. And she's been there kind of as a safety net for us if we run into problems. Our screen doesn't have as many options as what Laura showed you, but I'll tell you, even with everything you see on your screen right now on the desktop QuickBooks version, we use about 4 of those buttons. So, and that still takes care of a lot of our information management and keeps a strong peace of mind, because working with Excel, I'll tell you, there's a lot of room for mistakes. And one of the strongest features, I think, for us for QuickBooks, especially when we get into the busy growing part of the season, is that reconciliation feature. So we use it for our monthly banking. So at the end of each month, once we get our statement from the bank, we put in all of our checks, once they've cleared. So we actually don't put in our bills ahead of time. We don't put the checks that we've written. We put them in once they've cleared. We also record our debits. So we don't have a credit card for the farm. We have a debit card, so we record all those. And then we record all of our deposits, and I'll show you, we put a lot of detail in our deposits so we can track, what's being put into what account. And then because we're not for profit, we have a board of directors that we report to every 2 months. So we are keeping our board and our upper management abreast of where we're at with our finances every 2 months, and just use a standard reporting feature. So Laura showed this to you as well. When we input our checks, this is what it looks like. So it's coming out of the same bank account for us. We put in the check number, the date. This is to the accident funds. This is for our workers' comp insurance. It's one of 4 payments we make a year. Then down at the bottom under expenses, we would put what account that's coming from, and I'll show you later that we have very detailed accounts. And then that's it. We just input check after check after check. And if it's a debit from our debit card, same thing. We're saying if it's going to Farm and Fleet, or if it's going to our local gas station, what the amount is. And then again, is that coming out of the vehicle and our gas and fuel account, or is that coming out of our greenhouse supplies account? So we're tracking, and some of these, if we buy multiple items at one store, we're tracking each one of those purchases and what line item from our budget they're coming out of. Deposits, same thing. We're depositing to our farm account, the date, but then we are saying in detail what each of those each of those checks or amount of cash is coming from. So, and this is a little tricky, and I did this on purpose because our budget runs from January through December. So, if you look at November 27th, we're still depositing money from sales like Thanksgiving shares or a farm stand or a farmer's market in November, at the same time that we're taking memberships for our 2019, our next season CSA. So we have to bridge, between both years while not mixing the numbers. So we actually duplicate our accounts. So we have the 2018 accounts for the same things we're going to have 2019 accounts for, but we keep them separate so we can see how we close out the year in 2018 and then, start fresh with 2019. It's a lot of extra work, but that allows for us to look January through December at how we're doing. And then the reconciliation process can be super, super satisfying when it works out just great. If you don't reconcile at the end of each month, then you have to go back through and see, you know, where you made your mistake, where you transposed your numbers, or what check you forgot to enter, or whatever. But I know for us, even though it's really hard in like July, August, September, when things are really, we're flying by the seat of our pants on the farm, it's really important that we do this every single month so that we don't get behind and we know exactly what's going on with our finances. So reconciliation process, as Laura mentioned, is, you know, you're starting with what your beginning balance was after the last time you reconciled, and then from your bank statement, you're putting in what your ending balance is, checking all the accounts, all the checks and debits and deposits you want to include, which for us, because we only put them in once they've cleared, usually isn't a problem, and then you reconcile. So there are lots and lots and lots of reports you can put together just for my own use. I use several different reports to check in on how we're doing from time to time. For our board of directors and upper management, we just use the same profit and loss budget versus actual report. So I put it together monthly. So at the board meeting, they're looking at, we have, you know, every 2 months we have a board meeting, so they're looking at 2 months at a time. But we put this together monthly to see where we are and how much money we have left in our accounts, and if we're overspending in any area, if we have to adjust the budget. But you can see, you know, in this, I took out all of the numbers, but what you can see is all of our different categories, and everything that has that little gray triangle actually has subcategories, and I just couldn't fit it all on the same page. But for us, you know, we have I think 6 different types of shares, and we track all of those. Retail, we track, you know, what's coming from each of the markets. For wholesale, we are tracking all the individual wholesale accounts. I mentioned earlier with grants that some are for general operating and some are for special, we call it special funding, but that means, you know, if someone gave us, if we applied for funding for a specific implement, we would put that grant money in this 44500 donation grant special funds category. And then at the expense side, we have the exact same category. And so then if we, you know, get $2,000 for an implement, it's going to be used in the farm, then we would, at the expense side, pull it out of that category. So we know that we're tracking for reporting purposes what we spent from those specific grants. And the same thing for fundraising income. And then you can see in our expense categories, and this is from 2018, and I've even added a couple categories for next year so we can track a couple more line items a little more closely. But we really, you know, we want to know for every single purchase what category it's coming out of, and that helps us do a better job of budgeting at the end of the year for the next calendar year to see, you know, where we overspent, where we underspent, where our investments are paying off. At this point, are there any questions?
We do not have any questions at this time. This is a great opportunity, if anybody has any, to go ahead and type them in. All right, well, we don't have any coming through, so.
Okay, so the areas where we still are in like 5, 6 different programs that I would like to potentially use QuickBooks for are, one, payroll and timesheets. So I know this is for an additional fee that is not part of the basic QuickBooks program, but payroll for us, we currently do with an Excel spreadsheet, and includes, you know, we do payroll twice a month, and we have several different employees, and there's the state and federal Medicare, Social Security. There's a lot of different formulas that we have in the Excel spreadsheet, and Personally, I would love to switch to something that has more safety features, because Excel you can make mistakes in. And this is the same thing when we're rolling in the middle of the season. It takes a lot of time to go through the timesheets and to work on payroll, and especially when you get to what I just went through the last couple of weeks with W-2s. That's a huge effort too that could be really tidied up by use of the QuickBooks program. For us, for auto bill pay, that's not so much of a feature that I'm looking at right now, because we don't tend to have many monthly payments. But I know, for some farms that might be a really important feature, and so that's available for QuickBooks as well. Invoicing, we right now use Square, and that's been pretty convenient. And we just use it for our wholesale accounts. Some additional sales, I guess, we've used Square for, but it takes entry into the QuickBooks system right now, so it's kind of a duplicative effort, where we could be doing our invoicing through QuickBooks and not, through Square first and then having to input it into QuickBooks. So that's, I think, a level of efficiency that we should probably look into. And then the last thing that I'm probably going to jump on first is member management. Like I mentioned, we have closer to 200 CSA members, and some of them, right now we track all of that through Excel. So, their contact information and which shares they're signing up for, and do they want to be a volunteer on the farm, and have they paid yet, and if so, have they paid full or in installments, and if everything happens as it should and someone pays up front and one time, it's not an issue. It's not too much of an issue. But when we have members that will sign up for a spring share and then decide later they want to sign up for a summer share, and then they want to sign up for a cooking class, and those are all things that all those entries in Excel spreadsheet are not as powerful and as useful for us as they might be in QuickBooks. So right now, for anyone that's in a similar boat out there that might be running a CSA farm, I think that QuickBooks could be powerful for managing customers. It would take a lot of work up front to put all the information in there, but for most of those customers, you're going to retain them and work with them year after year, so it is pretty hefty time investment up front and would pay off, I think, in the long run. And that's all I have, although I'm open for questions. I've been learning a lot as I go, and I still have a lot more to work through. I've never gone through a QuickBooks tutorial, and frankly, I haven't, because I think I might be overwhelmed by all the features that are available that we wouldn't actually use. So we chose instead to just hire a bookkeeper who would just get us set on the right page. But anyway, if anyone finds our experience relevant and you have specific questions, I'd be happy to answer them. Thanks.
Thank you for sharing your perspective, Traci. I find it so valuable to hear how farmers are implementing these things on the ground, what's working, what they can see that might work better. I just find it so valuable. So thank you so much. And thank you so much to Laura as well for your expertise coming from the nuts and bolts side of QuickBooks, which is the part that I think so many people find daunting. And it's really great to have it kind of broken down into what features are available, and then you can start picking and choosing what might work well for your farm. So are there any questions among our listeners at this point? Go ahead and type them into the chat feature while I switch the presentation screen back over to myself.
Mallory, there was one thing I did forget to bring up.
Okay.
And I don't know if you want, there is something in QuickBooks you can do called classes. So we have people here that, they want to see their dairy income and expense versus their crop versus, something else. And that is something you can do in QuickBooks. But it takes a little more effort. And then you can run a P&L by class, it's called, and you can see my dairy expenses, my crop expenses. So that is another very nice feature of the program.
Great. So we do have some questions that came through, and it looks like my chat feature was not updating, but when I moved it, it did. So um, there was one question, and Traci or Laura, whoever feels most capable to answer, can jump in. How do you enter handwritten checks not printed out of QuickBooks?
Okay, so that's what we do. We don't print any of our checks through QuickBooks. So we use the old-fashioned checkbook, and then once I get the bank statement back from the bank, I then manually enter into QuickBooks what the check number is, the date, who the vendor was. If it's a new vendor for us, then we, put a profile, basic information of who that vendor was, what the amount is, and what expense category it should come out of.
Thank you.
Right.
Just to answer the question.
Screen if you're going to print or hand enter a check that we showed.
You said that's the same screen for either of them? Great.
Right.
And then the next question is, how do you record mileage?
We don't record mileage because really there's no, well, let me take that back. Are you recording mileage that you are paid or mileage you're paying out?
The question is not that detailed, so maybe you could answer both sides of that.
Okay, for a mileage expense that you would pay out to somebody, that would just be an expense. If you're recording mileage to use it as a depreciation item, that would not go in QuickBooks because it's not really cash related. Hope that helps.
Thank you. And the next question is, does the budget function work well? And I don't have much more information. So what are the strengths and limitations of the budget function?
Well, I know for Sola Gratia Farm, we put together a budget at the end of each year, and that's our baseline for QuickBooks. So that's just for us for comparison purposes. Of in each expense category, what we expect in the coming year and what we anticipate for income. I'll tell you, we're very conservative, as you should be with what your income is going to be, and we're liberal with what our expenses is going to be. I also wanted to mention, so for us, it's really just a comparison when we're looking at the profit and loss at the end of each month to see how we are with the budget. And then the other piece that I wanted to touch on is a depreciation schedule. So for us, for all of our assets, we have a depreciation schedule and have an amount that we put in as an expense each year that we have to come up with income to cover. So that's something we put into our budget every year.
Thank you. So the next question is, what are the graphing capabilities of QuickBooks? The asker would like to be able to see graphs for trends.
I can't think that, there's a budget versus actual graph. Otherwise, I know you could export to Excel and do a graph out of there.
That's kind of been my experience as well. I haven't, I only use QuickBooks Online, so I'm unaware of what desktop, sounds like desktop is equally weak in graphing, but to be able to see expense and income trends graphically, I export to Excel and then make graphs there. There is one feature on the QuickBooks Online portal where they have on the dashboard when you first log in, it has a couple of pretty simple graphs that it shows for monthly, quarterly, and annual trends for expenses and invoices. But there isn't a whole lot of customization that can be done there. It's just more of a little prefab widget that it shows you. So it shows a little bit, but it's not nearly as powerful as what the spreadsheet reports, how as powerful as the customization on the spreadsheet reports that you can export. The next comment is one of our listeners has managed a couple of nonprofits who use QuickBooks. And they said that they wouldn't recommend using QuickBooks for customer management. Both of the organizations have moved to CRMs. So Traci, have you, as you're exploring your thoughts on customer management, have you thought about the strengths and weaknesses of a CRM compared to QuickBooks? And by CRMs, we're talking about things like Salesforce, where you can manage customers.
Yes, so I have spent a lot of time looking into this and thinking about it, and what I've come to so far is that I just can barely stomach the expense that it takes to either purchase software or pay for a program where you have a monthly subscription or yearly subscription, or a percentage of your sales for a program like that. So we might get there. We're not there yet. So right now I'm still trying to find a way to work with what we've already invested in, which is QuickBooks, or right now just continue to manage it through this hybrid of Excel and Google Docs and contacts. But whoever the commenter is, I hear you. Those programs are super awesome. And if you're up for spending 2 to 3% of your sales, or several hundred to a couple thousand a year, they're really powerful programs. We're just still a small enough firm that I feel like that's an administrative cost we can't afford right now. The counter argument to that is it does take a lot of my time to manage all those things, and it might be a wash in the end, or it might be savings in the end. But yeah, I haven't been able to take that step yet.
Thanks. And so we have one final question. This listener said, I had not heard of keeping 1099s on all your vendors. Can you define vendor?
Sure. So somebody that should receive a 1099 is somebody that you pay at least $600 for work they do for you, an attorney. Vets now, in the last couple years, they need to receive a 1099. You want specific details, because even if they're a corporation, you don't have to send them a 1099 unless it's a corporation attorney. Then they do need to receive a 1099. But if you just buy seed from a vendor, he would not need one. If you hire a gentleman to come and repair your building, he should get a 1099 for the repair portion and not the material. I hope that helps.
Yeah, and the IRS has pretty comprehensive information on their website about who needs to receive a 1099 and for what activities they need to receive that. So that's something you can look to the IRS website for, as well as talk to your personal accountant, because it can be a little bit complicated who needs to have a 1099 and who doesn't. But it's just an excellent rule of thumb to collect W-9s on all of the people that you pay, who you may in the end have to end up filing a 1099 for. So that way you're not having to backtrack. Like Laura was saying, it's really hard once you've written the check to get them to give you the W-9, because it's just low priority. They don't have that incentive of, I need to get that in so my check comes to me. All right, so any final thoughts from Traci or Laura before we wrap up? Okay, well, thank you all so much for joining us today, and thank you to Traci and Laura for sharing your expertise and your experiences. I would like to let everyone know that I will be sending you an email as soon as we end the webinar that will contain a link to a survey where you can give us some feedback on your experience here. This evaluation is part of our reporting process for the grantor who helped make this webinar possible. It also helps us know what you value and what you could see us do better next time, so that we can continue to meet your needs and to understand where we're hitting the mark and where we can improve. I also want to turn your attention to some webinars that we have available on our site that were recorded in the past. This is our 4th installment in our Farm Finances webinar series. And we've done a webinar series on the big three financial statements. So crafting a simple balance sheet, profit and loss statements, and cash flow statements. Those are all available on thelandconnection.org. And we also did a webinar recently on cultivating motivated and reliable employees. So we covered some employment law here with respect to how it plays out in your accounting, but we cover much more detail about how to legally hire employees and how to keep them motivated and what are some good on-farm HR practices. And then we also did a webinar on mastering the farmers market, and it's all about cultivating customers and driving foot traffic to your booth and getting more frequent customers to come back. If you would like to ask questions of Laura or Traci in private, they both have agreed to answer questions by email. And so their emails are available here on this slide. And if you would like to reach out to me, my contact information is available here. This webinar has been recorded. The recording will be uploaded to our website and YouTube page later today. You will also receive an email from me with a link to the recording. So if you want to capture the contact details of our speakers at another time, they are available there if you want to review what you have seen here. So thanks everybody, and I really appreciate you all joining us, and I hope that you have a wonderful afternoon. And a special thank you to Laura and to Traci for sharing your experiences and expertise. So thank you everybody, and have a wonderful day. Yeah, thank you.
Thank you.
Bye everyone.